spectacular numbers, but FOMC, Nvidia, Asia, and then the kind of fall that we had yesterday to be recouped. So lots to talk about this morning.
Lots to talk about this morning. And just add to that mix, HSBC, 80% plus revenues wiped off because of China overhang. So a lot to unpack on the global side. Domestically, of course, a ton of stock-specific news that is going to, really drive the markets and news. An important cabinet decision, set of cabinet decisions yesterday in the defense space on sugar stocks. So we'll unpack all of that. But let's quickly take you through the top global cues. So Wall Street regular trade ended fairly muted, but the action after markets closed on Wall Street, futures were up, driven by Nvidia. And what a story Nvidia really is. Their quarterly numbers are just mind-boggling. Look at that figure. Year-on-year revenue is up 265%. The company that bet on AI is ruling the roost. A bit of short selling before the numbers came in, but the traders who decided to short sell must be crying right now because that stock has jumped at least 8% post-trade, perhaps pared down by now. So Nvidia, the story on Wall Street. But the other big story, and really the really big one, is the FOMC minutes. Now, the reason this was important is because the Fed made it clear that they're not ready to cut rates anytime soon. Powell, in an interview, had made it clear. The minutes have underlined this once again. So I wouldn't say any massive negative surprise in what the FOMC minutes reveal. But most officials have noted the risks of cutting rates too quickly and also asking the question that once we move down the rate cut cycle, can we really sustain it? Data is giving mixed cues. You've had some inflation data which is running hot. That's not really giving comfort to officials. And the one good thing that is underlying is that rates are at their peak. This has been reiterated time and again. However, look at what happened to the 10-year. It has trended over the 4.3% mark. Not massively, though. Not massively, though, because that much fear is not really coming in from what FOMC is saying. I'll just quickly mention a couple of other things because a lot of news overnight that we should unpack. And I was talking about HSBC. European markets were slightly down and HSBC was a big culprit. But I'm talking about this stock specifically because it sunk 8%. Their pre-tax profits dipped 80% on an overhang of Chinese banks. And that's really one story to track, that what's happening with China's financial system, with their real estate, is there going to be a spread and a contagion. HSBC, anyway, obviously did feel some of that brunt. But Asia, otherwise, a different story. I want to just pull up the Nikkei. Look at that Nikkei. It is at all times high. It has surpassed levels it hit in 1989. Strong corporate results is largely responsible for that. And if you pull up the entire Asia Pac, it's not looking too bad at all, apart from the Hang Seng slightly down. So the question is, then we come back to it, are we going to see some of that pair out in our markets today, which have been a little skittish, to be honest, Niraj?
And you could argue that. But, Tamanna, I mean, just before I get to trade setup individually per se, because we saw a day of profit booking, it's just interesting to see the kind of subscription that is coming into paper from India. Across. And I know there's so much of conversation around how MNC companies are selling out, etc. Chinmay, our colleague, is going to put out a story today, which speaks about how all through 2023, we've seen PE exits, promoter exits, and the chatter was always that, oh, everybody's selling, expensive retailers are buying, they'll hold the last bag. And the markets have actually rallied quite convincingly since then too. Yeah. So there's this talk about this Eureka Forbes deal today, etc. But look at the QIP of Union Bank of India, 10 times subscription.
Insane.
And people are talking about PSU banks being expensive. People who are putting in money are not fools for a 10x subscription to the paper available. There's a chatter that BlackRock might have been invested as well. So there's some serious move towards quality Indian paper happening. People should take cognizance of that as one key point. So I thought that was interesting. And just the fact that Union Bank of India QIP has been subscribed the way it has been is quite stunning, really. So that was one. But you were right, so right. I mean, we saw 100, 120, 150 basis point, or rather points fall yesterday on the Nifty. We were talking about it on the countdown show yesterday as well. I mean, 6 days of consecutive up move on the Nifty. I mean, you will probably see some bit of a corrective move happening, and that is what probably we saw yesterday. So that was part one and par for the course, really. Now, because people look at levels so closely, I just thought to highlight that when you look at the call option data on the strikes, 22,200 and 22,300 are the highest OI positions, and therefore, optically, that is the point of key resistance. There is also a point wherein if the market takes that out swiftly, there could be short covering. Very unlikely that that will happen today, but those are the levels to keep in mind if you really want to look at levels. So that's part two. And part three, something that again both Tamanna and me highlighted on India market close yesterday. Amidst all the corrective moves that we saw yesterday, two spaces stood out. PSU banks, SBI was in the green, and real estate. Real estate stocks, a lot of them hit fresh life highs in trade yesterday. Look at the Brigade announcement today, and we'll talk about that as well later on. But just goes to show that there is some serious interest and serious business proposition in a set of select real estate names, and therefore that pocket should be keenly watched out for. DLF was at life highs, Phoenix was at highs yesterday. So clutch of those stocks are doing very well, and I think that's a sector that certainly remains firmly in focus. So that's to be kept in mind for sure.
Yeah, I would add Macrotech to that mix. Raymond, and even just a quick word on real estate to add on to exactly what you said, which is absolutely right. If you look at the numbers, the quarterly numbers, the high input costs are weighing down to some extent, but the cycle is just at its beginning, which is why a lot of analysts are still bullish on it. You might see, a few days of patchiness there, profit booking, etc. Real estate, definitely an interesting space. Just sugar, the other one that we should talk about this morning. So last evening, a slew of cabinet decisions. And this one's important because the government has hiked the sugarcane FRP by 25 rupees to 340 rupees per quintal. FRP is the fair and remunerative price. It's, I would say, the MSP for sugar, if you want to put it that way, determines the price at which sugar mills have to buy from producers, from farmers. Now, expected before an election, and you can expect more sort of announcements on this end. This always is a bit of a political issue. It's an 8% hike overall. The question is that will it be very, very negative for sugar stocks? On the face of it is, because obviously if your input costs go up, it is negative for sugar producers. But remember that ethanol blending has seen a lot of positive cues and news in terms of policy. There is a big push there. So we'll wait and see how it actually pans out. But sugar already beaten down is one space that I would keep an eye on. The other big one is Grasim. Grasim Industries has been on a tear. I think up about 7% in the last couple of weeks. 1 month is about 5.5%. And the news flow is about its entry into the paints business. Today, in fact, you will see that official announcement. There's going to be a press conference later in the day that Kumar Mangalam Birla will address. Then they're going to launch the Birla Opus Paints business. They're going to inaugurate 3 plants. So that will be interesting to watch out for. Remember, they announced that foray in 2021, and it's a planned investment of about 10,000 crore rupees. They intend to be the second largest player over the next few years. And I found this interesting, Niraj, because you cover it as well in your 3 stocks to watch, the Jefferies note, which talks about what it means for Asian Paints. And this was a bit of a debate in the canteen this morning while we were getting coffee. That does an Asian Paint really have a threat from Grasim? And just remember how many more players have come into the market. And Jefferies says that maybe it's going to be a bit of competition.
Yeah, I mean, it's just interesting. I mean, it will be, I'm sure viewers, none of us, neither me or Tamanna, are saying that this dislodges Asian Paints in any fashion, but just the multiples that Grasim Asian Paints trades at, and the point, Tamanna, that Jefferies mentions in their note, that 2 more plants by March 24, 3 more plants over the next 12 months. And according to them, the paint sector has not seen such stiff capacity addition in its history, even by incumbents. So could margins and market share come under threat? And will the markets take cognizance of that? And Jefferies believes the answer is an unequivocally yes. We know some buy-side people who don't believe so. So it's a classic mix. Who knows who wins? But if the sector is down today, you know why. Yeah. Just the other point, Tamanna, I just did this bareback number crunching for the last 6 months and the last 1 month for the incumbents, Asian Paints, Berger, Kansai, and Nerolac. The last 6 months, the stocks have done nothing. Asian is down 6%. So, well, they're down. Asian is down 6%. Berger is down 2.4%. Kansai is down 5.4%. So these stocks haven't gone anywhere while the broader markets or the Nifty has moved a little bit. So clearly some bit of this is being baked in already.
Maybe a bit of consumer overhang as well. That entire, consumption space has been iffy. So you could see that in the broader picture. Or is it a paints problem? Is something we should unpack?
Yeah, but very likely a paints problem because, Amit Singhal, for example, goes on record so many times saying that in an overall house, paints is just 1.5% of the cost.
Yeah.
So we don't impact the cost metrics of a consumer so much. And therefore, very likely that the market has been waiting for this to happen. And now that the details are unfolding, Sajid, our colleague, is at the Panipat unit of Grasim. So it'll be lovely to hear from him and from the management as well. But this could be very interesting as to what happens to stocks because of a big, deep-pocketed
player coming. And think of it logically. We were just talking about how the real estate cycle is booming. You're building homes, offices, you need to paint those walls. So one flows into the other. Just one more on my list that I want to talk about is NBCC. The company has received an in-principle approval from the Greater Noida Authority for the development of unused and purchasable FAR, that's floor area ratio, for the Amrapali project. And, NBCC again has been on a complete tear down, of course, yesterday in trade, but that's one I would watch out for. Brigade is something also that you were covering. So a lot in the building, housing, real estate theme today.
Yeah, and yeah, just a brief update there. I mean, they've signed a JDA for the 2.5 million square feet project in Chennai. One more, right? I mean, these companies from a Brigade to a Sobha to whatever, DLF to Macrotech to whatever, keep on getting these projects one after the other. Oberoi has signed 2 Marriott properties in Mumbai.
Yeah.
There is talk that Prestige might sign a few more very soon. And Brigade is also going to open a hotel as well. But the revenue potential of this JDA alone is about 2,000 crores, Tamanna. We don't know the breakup, of course, but very likely positive for Brigade. So could see a reaction today.
So just from stock focus to a little bit of macro, what's exciting when people start constructing more and India starts constructing more? A huge multiplier for the economy, for jobs, for all the industries that get impacted. So overall, if you were trying to look for an example of an economic boom, this is definitely a very clear-cut one.
Most certainly. Yeah. Okay, so these are a few stocks. The 3 other stocks on my radar: Eureka Forbes. We put out that piece yesterday on our on the channel and on the social media that promoter Lunolux would sell up to 12% stake in the company via large trade worth 1147 crores, effectively a 3% discount to the closing price yesterday. So if you see a bit of a corrective move today, you know why, but very likely that this might get executed in the block window itself, so may not have too much of a leakage, might not have too much of an impact also on the stock if it gets consumed easily. So watch out for Eureka Forbes in the session today. Could be an interesting one. It's large, but the overall size is not as large as maybe some of the others that have happened, including a Whirlpool that has recently happened. So keep that in mind. Large from a Eureka Forbes perspective, but 1,200 crores is okay. I'm highlighting Walchand Nagar. There could be more companies as well, but Walchand Nagar came to my mind, so I'm highlighting that because the cabinet has approved amendment in the FDI policy on the space sector, has allowed 100% FDI under government route and up to 4974 and 100% in the automatic route for different subsegments. So a lot of the companies which kind of cater to these defense space related pockets, some startups as well, by the way, there is Skyroot and some others, could all be in focus. But from a listed market perspective, somehow I could think of Walchand Nagar as the easiest one that came to my mind. So I'm highlighting that. Please be mindful that there could be more. But very likely that the stocks in this space, including this one, could react positively. So watch out for that. And there is a brokerage note that, amongst others, I mean, ABB has some positive notes, etc. But the City note on Maruti was interesting. They maintained a target price of 14,200 on the company. They've opened a 90-day positive catalyst watch, believing that monthly volumes and Q4 results both will be strong. So watch out for Maruti. If it has a positive reaction, you would know why. It's a catalyst watch opened by City. So that's to be kept in mind. And just before we toss to the editor's cut, Tamanna, the news flow on Z Entertainment doesn't cease to flow, right? I mean, now show cause notice possibility is just caught in a quagmire from where it somehow doesn't seem to be able to get out.
You know, if Sony was being questioned about why it walked out of the deal, whoever made that decision to pull the plug right now would be saying, thank God we did, in a sense, because of all of the negative news flow on Z. So the company always maintains that the investigation is on, we are cooperating, everything is, you know, in the ether. But the fact is that the news continues to be very, very negative. I would also want to see today what's happening to Paytm. Can you continue to stick on a 5% upper socket through the week with no movement at all? Just wanted to mention this Bernstein note on PSUs, only because the rally has been phenomenal. Their India quant strategy is focusing on how far the PSU rally can go, and arguably that's the question of 2024. The index, the BSE PSU index is already up 21%, YTD 279% since October 2020. They say it's an expensive trade, especially industrial PSUs, though relative valuation advantage is still there. Fundamentally, the pack looks better versus history. However, consensus looks too bullish. One point I thought is important is that the rally is driven by retail investors, no meaningful institutional crowding in PSU names in this cycle. It's a momentum play, high volume, dividend yield and value. Now, this is one space you need to watch before you go into election season. Typically, it does see a boost there. So there are a whole clutch of analysts who are bullish on PSUs, but tread with care is all I would say.
Yeah, no, very, very much so. And just viewers, remember, we're distinguishing between PSU banks, which are still cheap, relative to other PSUs. So that's the key point to keep in mind. Just two more things. Sula Vineyards could be a stock in focus, so that's to be kept in mind. There is a positive news flow. There is also, how do I say, a bit of a negative to the Sula's announcement in that the future VAT refunds are capped at 20 crores. So even if the number may be higher, they don't get it. I think there's a clarity that we'll probably try and get from the management sometime during the course of the day. So that's to be watched out for. I was just trying to see if there are some other news flows. There is a story in one of the dailies, Tamanna, about how ITC might want to buy a small stake or a large stake in Pratap Snacks. So very likely that Pratap Snacks could react today. So if it does, you know why it is reacting. Thought should bring that out for you. And if yesterday's downgrade by Avendus Spark on OMCs wasn't enough, we have a CLSA downgrade. CLSA is saying that we are cautious and they are downgrading the stocks to a sell. So watch out for BP, HP, IOC. They were amongst the top losers in the PSU pack yesterday. Very likely they could be reacting today. Maybe I should have mentioned that first when Tamanna was highlighting the PSUs, but just thought that it was important to bring out this brokerage note as well. So, you know, that's the sum and substance of what the stocks you should monitor. Keep in mind, PCR is low, so that's a positive, but the number of stocks in the FNO ban is 15. It usually doesn't happen unless the market is a concern, so keep all of that in mind. But it's time for the editor's cut, and I'm going to hand it over to Alex to tell us what is it that we are focusing on today. Alex, you are really laying focus on one key subject today.
Absolutely. It's one sector, and I'm sure
What's with that voice?
So I'm getting my voice back. It's coming back. It's coming back slowly. Like I think the fortunes of FMCG companies at this juncture in India. And in fact, that is what we're talking about right now, which is that the investor is constantly looking for a bargain buy and is looking for value. The question is the FMCG pack a bargain buy? Of course, some would point out that a GCPL or a Tata Consumer have done incredibly well. They've rewarded shareholder, confidence. But at the same time, one would argue that those are exceptions to the rule. The question is, should you look at those relatively lower valuations and buy? But first, let's talk about the performance year to date, because it's been an underperformer as a whole, and those exceptions.
Yes, so Alex, it's been a tough calendar year 2024 for the entire FMCG pack, because we've seen a significant correction in the largest of the companies that would include HUL and ITC. In fact, both these have also been leading the losses in terms of share prices through the course of January and, of course, mid-Feb right now. Why? Because of weaknesses in earnings. In fact, this morning we've had retail sales data, which still continues to suggest, and they barely make it to over 5%, 5 to 6%, if I'm not mistaken.
The Retailers Association of India has put out data for the month.
And it's very evident in the kind of numbers that we've seen for the third quarter gone by, where in some cases there's been a degrowth in volumes, and in some cases volumes growth has been no more than 1.5 to 5%. And that's what's in fact weighing on the indices, weighing on the
pack as a whole.
Right.
The FMCG
right.
pack. Yeah.
So, to talk to you about the performance as of now, except for Tata Consumer and Godrej Consumers, as you mentioned, all the other larger FMCG companies have declined, not only in the calendar year 24, but also through the course of the year, 1 year. We haven't seen as much strength as compared to the rest of the markets. That's how things stand at the moment. And of course, volumes are going to continue to be under pressure, as per the indications of the management, because rural demand continues to languish. We have seen a lot of challenges there. These are some of the factors we need to keep.
But with regard to those two, there are certain tailwinds or reasons for that outperformance as well that you need to highlight, right?
Right.
GCPL as well as Tata Consumer.
Right. So, Alex, as you mentioned, exception to the rule. In this case, both Tata Consumer and GCPL are exceptions. Tata Consumer is building out a business. It has already made a significant amount of investments in the past few years, and you're seeing a result of what they have done at the moment. Godrej Consumer Products is coming off a very, very low base, because it's actually faced a very, very challenging time in the preceding years, in the years preceding FY23 as well. On the other hand, all the other companies, and they have a relatively large distribution across India, and well, that's where we are seeing that little bit of weakness come in, and that's the only reason why we have seen tremendous strength in Tata Consumer as well as Godrej Consumer. If you consider the 1-year returns, Tata Consumer Products is up 60%.
Yes.
But for all the other companies, 60% is a far cry in terms of returns.
And in terms of the path going forward as well, and that is reflected in the expectation of revenue growth heading into the next financial year as well, where barring a couple which are going past that 10% mark quite comfortably, everybody else is below.
And that perhaps is the reason, or also because you start seeing factoring of strength in a lot of these counters, or rather weakness in a lot of these counters. So if you consider the FY25 growth estimates for revenues, you are continuing to see an expectation of around 10 to 15% growth for Tata Consumer and Godrej Consumer. Of course, Dabur and ITC are also expected to show 10% growth. ITC, though, mind you, will come off on the back of a low base. And in terms of earnings growth as well, say for something like a GCPL and Tata Consumer, which are expecting about 18 to 22% bottom line growth, we don't have as much to speak for when it comes to the other companies.
And finally, looking at the valuation metrics, which is, of course, a factor of the expectation of the EPS growth, which I think you've kind of covered, they're all trading below their 3-year average. But then we're not saying jump straight in, because the path ahead still looks a little murky.
So most companies are trading below their 3-year average. Sure, we've seen a correction, but do they offer value at this point in time? Is their valuation significantly below their 3-year historical average? That's not the case, because let's go through the valuation. This perhaps is the most pertinent of the factors that you want to address right now. Something like a Hindustan Unilever, currently going at around 54 times. On an absolute basis, this is still a ridiculously priced stock for a company which is giving you no more than 5 to 6% growth in terms of your volumes. You look at something like a GCPL or a Nestle. Nestle is still going at around 70 times. It is at a discount of 285 times its previous 3-year average. So on an absolute basis, we're just not certain whether or not some of these companies do, in fact, even now offer value. And the likelihood at this point in time is that we are likely to see, we're most probably going to see consolidation not necessarily a sharp up move. And that certainly won't come through unless and until we see that recovery in the rural segment.
And volumes would be the metric to watch out for. If you see an uptick significantly, then that's when you start looking at this back more seriously.
Well, it's going to be hinged on rural recovery largely. If you have recovery in rural demand, you will start seeing volumes. But until then, it's going to be a wait and watch.
All right, so wait and watch. Don't jump headlong just because the valuation picture looks a little more attractive than it has in the last few years or couple of years. Now, we have to slip into a very quick break, but before we do, take a look at this slice of a conversation that my colleague Sajid Mangat had with the management of Hindustan Zinc. They're talking, of course, about capacity expansion in this particular slice, but there's a lot more to talk about. Take a look before we head into a break.
Last year, Hindustan Zinc crossed 1 million tons of metal, and SK is responsible for 25% of that, approximately. And, we have a goal of reaching 1.2 very soon, and soon after that, 1.5 million tons. So really, we have a very, very ambitious growth trajectory here. And honestly, it's the need of the hour. India being, the fastest growing economy, the way the infrastructure is growing, the way the country is growing, the demand for zinc is only getting higher and higher. So, we're very proud that, domestically we're able to provide.
Welcome. You're watching India Market Open. Quick look at the implied open before we get to the top headlines at the start. And look at what kind of a day we're set up for. Remember, global cues are mixed. in a sense, but your Nifty implied open does point to at least a positive start after a rocky close yesterday in trade. But top headlines at this hour, U.S. markets muted as Fed officials expressed caution about lowering rates too quickly. The S&P 500 and NASDAQ futures, though, have climbed, boosted by NVIDIA's record revenues and upbeat guidance. Meanwhile, Asian markets are higher. Nikkei rebounds in trade after a couple of days of profit, but it's at all-time highs. Solid corporate earnings have boosted the Nikkei. One more big deal in the bulk trade segment. Eureka Forbes promoters to sell 12% stake to raise 1,148 crore rupees. And SEBI is likely to issue a show cause notice to Z in the fund diversion case next month. That's an NDTV Profit exclusive. Farmers have suspended their protest march for 2 days after the death of a 23-year-old farmer. A silent sit-in protest will, however, continue.
Tamanna, the other interesting piece, and just before we go over to the FNO focus by Agam, and viewers, you should stay tuned for that because I think that's a really nice focus piece that Agam does. We get you some really nice option trading strategies as well, which is what a lot of you love to trade. So you should tune in for that. I don't think too many people do it better than Agam. So stay tuned for that. But just a piece, Tamanna. Yesterday, I know in IMC we were talking a lot, India Market Close we were talking a lot about oil marketing companies and the Avendus Spark note on OMCs and how they believe that the risk reward was not favorable. I think that's being backed up by CLSA today. When it's just 2 notes in 2 days.
Yeah.
And CLSA seems to suggest the same thing, that OMCs are baking in high margins and steep premiums to global peers, and therefore they have a sell rating on IOC, BPCL and HPCL. And it's interesting that all of this is happening at a time wherein there is maybe a fear that what if there is some bit of tinkering done with prices at the till and the OMCs have to bear that brunt, part one, or part two, what if oil prices inch up because of all that's happening on the geopolitical side, and therefore there could be some bit of an impact on these companies.
latter more likely than the former. Even the CLSA note, Niraj, if you notice, say that the likelihood of a cut in retail prices of petrol and diesel now is lesser. Simply because the government doesn't really think it needs it to win the next election. Very very plainly put, they don't need to do it. The reverse, though, is the concern that post-elections, considering they have a pretty tight fiscal deficit target, which we heard in the budget, you might have to hike the taxes on petrol and diesel because you need to make up those coffers. And also geopolitically, so far it's held out. The Red Sea crisis, etc., has not really moved crude prices, but that is the next big sort of headwind or challenge on the horizon. So OMCs are going to have another rough day. I'd stick my neck out. But, what did you make of the fact that before the Avendus and CLSA note, there was a slew of notes saying OMCs look great?
Yeah, so they look great at that price. The stocks rallied quite significantly. Look at the last 3-month performance of these boys, right? I mean, BP, HP, IOC and BPCL in particular has had such a good run in the last 3-odd months. I'm using 3 months because that's the way we can get the charts up. But 57% Tamanna for BPCL in the last 3 months. And HP and IOC too. IOC, I know for sure, even HPCL, if I'm not wrong, 77% actually better than BPCL. I stand corrected. And IOC too has had a really good run, right? 80%. So such a strong run. I think these notes are effectively saying that they are baking in the best.
But the fundamentals don't change, right, over 3 months.
But the prices and the valuations. So it's a sell on the
valuations have, the negative notes are also baking in fundamentals now. You're finding a reason to support
the argument
your indigestion of high prices, if I can put it that way.
Yeah, very, very well put. Just before I put to Agam, just Avendus Spark and what they put out yesterday as well, and we highlighted this note on the closing show, but effectively their view yesterday was the same. They'd reduce the rating on BPCL and sell on HPCL and BPCL, both of them, which is what they track. And the reasons were very similar. I mean, found fundamental reasons, but effectively the valuations are the issue out here. Okay, let's now focus on their derivative space. It's 8:30 or thereabouts. So Agam is standing by to break down what the cues were and, well, some interesting option strategies today as well, I guess. Agam, good morning.
Good morning, Niraj. Well, it was a choppy day of trade yesterday. A lot more weakness seeped in through, specifically with respect to the Nifty. And well, that's something that's going to play on everyone's minds, considering it is the Nifty weekly options expiry. Let's start off with the basics right at the top. We take a look at how things have panned out as far as your index futures are concerned. And unwinding coming through, even as the index comes off to a certain extent by 0.6% as we speak. And of course, the bank Nifty, on the other hand, it was a flattish day of trade, even though it was extremely choppy. Well, we didn't see too much change in open interest there. But as far as today's day of trade is concerned, let's take a look at how things have panned out, how are traders positioned. Now, on the higher end, we continue to see a considerable amount of open interest building up around the 22,500 calls, the 22,200 calls. This level perhaps will be a little bit more pertinent because we saw the Nifty hit that market come off. So this certainly does provide a little bit of resistance, at least in the near term, most certainly today. Do remember that yesterday we also saw the Nifty test 22,000 on the lower end, and hence we're seeing a little bit of puts accumulation, but not as much as the kind of numbers that we have been used to off late, certainly before the previous couple of sessions. So we are seeing a larger amount of call writing as compared to puts. That's something that you need to bear in mind as you go into trade. Yesterday's day of trade, naturally, while we saw a lot more traction around calls, considering we saw the Nifty fall, so a lot of traders did go ahead and write calls. But besides that, we're also keeping an eye on a lot of stocks. So let's take a look at how things have panned out for stocks. There's been a lot of weakness, and at least in terms of those which saw increase in open interest, we did see some longs building in ABB, which was perhaps the stock of the day yesterday. But besides that, a lot of weakness in L&T Tech, Bosch, NMDC, along with Ashok Leyland, all of them looking at weakness. Even in terms of stocks which saw unwinding in trade, there was more weakness, more losers than gainers. As you can see, Metropolis, Interglobe Aviation, MCX, and Exide, all of them looking at longs unwinding. Say for Piramal Enterprises, which did see a bout of short covering coming through. Let's take this forward and get in an expert opinion about how to deal with markets going in. We have Milan Vaishnav of Gemstone Research who's joining us on the show. Milan, good morning. Thank you so much for joining in. Well, as usual, let's start by taking a look at how you view the benchmarks, the Nifty and the Bank Nifty. How would you address them at this point?
Hi, good morning. I feel that Nifty as such right now it's on a bit of a sticky patch, and if I speak purely from a very short-term perspective, I feel that Nifty, even if it tries to mark an incremental high, it will largely stay in a range, and 22,250 is something which is likely to act, which is likely to continue to act as a resistance for not only for today but for the next week expiry as well, where we will head into the monthly derivative expiry. So by and large, I believe that if Nifty is able to take out 22,250, it may mark some more incremental high, but still, despite that thing, even if it is able to mark some incremental high, I still don't expect any runaway kind of up move in Nifty, and it is largely to trade in some 600 odd points range, with 21,700 playing out as support and 22,300 playing out as resistance. So I expect Nifty to continue to remain in this defined and little bit broad trading range. It will oscillate back and forth in this range. Might attempt to give some incremental high over the next coming days, but still a runaway up move is something I do not expect. And I believe that with every incremental high or with every technical rebound that we see, we should be focusing more on protecting our profits at higher levels.
It's becoming a little bit of a consensus, at least in the analyst community, about the benchmarks not seeing a runaway rally from these levels. But Milan, I believe you are selling a strangle on the Nifty at this point?
I have I have two approaches with the given technical setup, one for the Nifty and little bit different for the stock. So I have a little bit of a neutral approach for Nifty. I would be selling 29th Feb expiry, 22,400 call and 21,500 put. By doing this, I would realize a net premium of 95 rupees. That is a maximum income potential of 4750. And this would translate into an approximate yield of around 4% on the capital that one would deploy per lot. As a measure of risk management, we would move out of this trade if either of these two edges, that is either if 22,400 is taken out or 21,500 ends up getting violated. On the other hand, I have a directional bias for ICICI Bank because private banking space is something I feel that it's now improving on its relative strength. So I'll be taking a bull call spread for March, where I would buy 1,060 call and sell 1,150 call. And I would pay a net premium of around 24 rupees. So my maximum loss would remain limited to 16,760 rupees, whereas the maximum profit potential in this trade would be over 46,000 rupees. However, again, as a risk management measure, I would maintain a stop loss of ICICI Bank slipping below 1010 in spot levels, where we can even limit the maximum loss figure.
Okay, well, there you have it. So those are two of your trading ideas as far as the Nifty and ICICI Bank is concerned. The Nifty specifically, remember that as we move into the final week of the expiry, while the theta decay intensifies, any sharp movements, and in the parlance of more keen option Greek observers would suggest that along with the theta decay, the gamma spike and risk also increases. In fact, many would consider gamma to be an anti or theta. Under these circumstances, of course, your trade could go wrong, and under those circumstances, as Milan has already mentioned, if you do see a breach on any of those option strikes that he's spoken about, you need to move out of that strangle. Well, alternatively, do you think, Milan, that it would make sense perhaps to add wings for those who may not be able to have full control over the trade through the course of the day?
Yeah, you can add wings and make an iron condor out of that. But I think that would highly limit it would highly limit the profit potential as well. So it's like condor is nothing, but it's like taking a bull spread and a put spread simultaneously. So I think if you are vigilant enough and mindful enough to exit at the violation of any of the edges, I don't think there is a necessity to add wings and compromise on the profit potential.
Fair enough. Of course, for every risk, there is that much kind of reward. And when you do add wings, you also limit your risk. But along with that, that would obviously mean that your profits would also be that much lower. And of course, as Milan has already mentioned, at this point in time, it would not make as much sense to go on, in fact, buy those further out of the money calls and puts as far as this particular strategy goes. But Milan, on that note, I want to take a moment to thank you for taking us through the strategies as well as giving us a handful of trading ideas coming through. And with that, it's over to you, Tamanna.
All right. Thank you so much for that, Agam.
Did Agam do a Niraj? Did Agam said that Milan has done a Vaishnav?
Yes.
Almost there, but that's okay. Anchor prevails. But moving on, stocks in focus this morning. We have Varsha joining us with a whole list of companies and counters that you should watch out for. Varsha.
Good morning, guys. So let's start with Brigade Enterprises, wherein company is expanding its residential and hospitality portfolio in Chennai, where they've signed joint development agreement with Mrs. PVP Ventures to develop 2.5 million square feet high-rise residential project in Chennai with a revenue potential of around 2,000 crore. Company in addition have also signed a 45-year lease agreement with landowners to build 250-room resort. Also, they have collectively they have operational room count of 1,500 rooms across 5 cities, and they plan to increase their room count by 1,200 keys over next 4 years. Then we have Grasim Industries, where company is going to launch Birla Opus paint business and will inaugurate 3 plants. Now, they had announced their foray into paint business in 2021, where they had planned investment of rupees 10,000 crore, and company intends to be second largest player over next few years. So stocks that you should watch out for is Berger Paints, Indigo Paints and Kansai Nerolac. Let's see how Grasim will compete with these players. Jefferies in their report also highlighted that paint sector has never seen such a massive capacity build out in such a short span of time. Lastly, we have Salasa Techno Engineering, where they're poised to capture a significant portion of demand for monopoles, and they expect firm orders to manufacture and supply monopoles of rupees 200 crore within next 12 months. And recently they've commissioned new galvanization plant with capacity of 96,000 metric ton per annum.
All right, thank you for that, Varsha. Another set of stocks that are definitely in focus are sugar companies. There was a cabinet decision yesterday, and the FRP has been increased by about 8% for this year. Is that negative for sugar producers, and to what extent? M. Prabhakar Rao, President of ISMA, now on the phone with us. Mr. Rao, very good morning. Thank you for speaking with us here at NDTV Profit. Just want to understand the extent of impact you see with the hike in the FRP for sugarcane. Was this already expected?
Yeah, good morning. The FRP increase happens on the basis of the cost increase for the sugarcane farmers. So therefore, it is expected that it will increase every year. Though this increase appears little steep compared to the regular FRP increases in the past. As an industry, we welcome the enhancement of FRP because it helps 5 crore farmers who form the backbone of cane supply to the sugar industry. However, we have been requesting for corresponding increase of the MSP of sugar, the minimum sale price of sugar, and the ethanol prices. That has not happened commensurately this year. I think if that happens, we are absolutely very happy and we welcome this move.
Fair to say, Mr. Rao, that's unlikely to happen, where your MSP or your minimum sale price goes up, is unlikely to happen over the next few months. Would that be a fair assessment, considering we are going into election season, and overall there is a move towards inflation control? So retail sugar prices going up may not be really encouraged at this point. In that sense, if your input prices are going up, you can't sell at higher prices. What is the kind of squeeze you're expecting to margins? What is the impact that you see for sugar producers?
Yeah, I would like to answer this question in two parts. The first part is, it is wrong to presume that sugar is the reason for inflation. If you compare the commodity prices over the past 10 years or 15 years horizon, the sugar is the commodity which increased the least. If you compare with rice or wheat or edible oil, any of these things which contribute to the food basket, the inflation of the sugar prices is the least. That is the first part. Therefore, there is a case for the government to consider enhancing the sugar prices, allowing the sugar prices to move more freely rather than restrict them. But the more important part which I would like to comment upon is, this is one crop where 100% of the market intervention is undertaken by the sugar industry, not by any government. If you look at rice or wheat, the MSP intervention is taken up by the government bodies like FCI, NAFED, etc. This is one case where it is completely done by the industry.
Oh, no, I get that point. I get that point, Mr. Rao.
Yeah.
But just to come to my question, because that's pertinent to our coverage right now, what is the impact you see of this 8% hike?
The impact is about 10,000 crores. The total estimated procurement of sugarcane at FRP is more than 1 lakh crores. So this impact would be around 10,000 crores.
Okay. So impact for the industry as a whole you see as 10,000 crores.
Yeah.
Okay. Just, I know we're talking about sugar prices right now in terms of sugar cane prices, but I also want to get your take, since you're here, on the ethanol blending. Now, some relief expected there on ethanol blending. Can you just give us a sense of what are the conversations on with government representatives and what you're expecting?
See, the recent revised estimates which ISMA has collected, which is done through a very scientific data estimates, indicate that we are going to land up at more than 320 lakh tons of sugar production. Therefore, there is a case for additional diversion of about 15 to 20 lakh tons towards ethanol. So we have been representing to the government to kindly consider this. And also we are requesting the government to procure about 4 to 5 million tons of sugar to maintain buffer stock, so that the market intervention by the government need not be through sudden policy changes. Rather, they can release or build up the buffer stock as the case may be.
Mr. Rao, just wondering, before we let you go, this 10,000 crores is an industry-wide impact is fine, but just to make it easier for people who are listening in right now, is this a sharp squeeze potentially on margins for companies, or is it not such a sharp squeeze potentially?
No, ideally, because that's why I was trying to explain to you the macro issues. This is an industry which is doing the procurement on behalf of the government from the farmers.
Yeah.
So therefore, there shall not be any squeeze on the industry. There should be a pass-through mechanism has to be there.
But since it is not there, Mr. Rao, since it is not there as of now, could there be a sharp squeeze temporarily on the margins, or it will not be a very sharp squeeze?
Yeah, if that corresponding adjustments are not happening, it can lead to a situation which was prevailing about 5-6 years ago. The payments may not be made to the farmers. The industry may go into bankruptcy again. So therefore, there is
despite
a need for
ethanol being there, you believe it could be a bankruptcy kind of situation, despite the ethanol economics?
Yeah, therefore, I strongly believe that government has done very good policy interventions in the last 4 or 5 years.
Okay.
So I hope that it will continue. That's my optimism.
Fair call. Okay.
And I'm not pessimistic that it will go into bankruptcy. I'm optimistic that it will lead to a better situation.
Fair call. Mr. Rao, leave it at that. Thanks so much for taking the time out and being with us and giving us those thoughts.
Thank you.
That's President ISMA on this piece of news. Nirav Asher and Shrikant Chauhan with us on this. Nirav, did you guys do you guys look at sugar? What do you make of this FRP increase? How big a dampener?
Thank you for having me on the show. Good morning. Yes, we have done a study on the sugar sector, and I think there was a time when this sector was completely regulated, and there was virtually a control on the FRP and the price at which you are supposed to sell the sugar in the open market, how much sugar will be sold in the open market. And I think this scenario, what we have seen yesterday, the increase in the price, FRP price, is definitely going to be a sentimental negative as far as the sugar stocks are concerned. And it's definitely going to hurt the margins of these companies in the near term. We expect the prices to increase after the elections because of the demand related issues also, because generally in the summer we tend to have very strong demand for beverages, sugary sweets, etc. So I think the demand is going to be on the higher side, and of course the output may still not be able to match up because of the erratic weather patterns, etc. So not being able to pass on the prices to the final consumers in the immediate short run could be a negative as far as the sugar companies are concerned.
Yeah, so negative for sugar right now. I just wanted to contextualize that ISMA has said it's a hit of 10,000 crore rupees. How much it will impact each company will have to be seen in terms of, the broader picture and that particular company's margin squeeze. But the fact is that sugar companies have had quite a bit of buffer with ethanol, and we'll have to understand how much that really helps. Having said that, Shrikant, very good morning to you. Of course, I want to know your view on sugar stocks, but I'm going to start with what you think on or what you're looking at on the indices, because Nifty held up above the 22,000 mark yesterday. Nifty expiry today. What are your targets on the Nifty and the Bank Nifty?
Yeah. Good morning, everyone. Yeah, I think, see, like the market is into a specific corrective mode uh, after hitting the levels of 22,250, because it was like a spectacular run that we saw from the levels of 21,500 to almost 22,250 to 75 without any correction. So that correction is coming. I think yesterday's correction was very close to the expected levels of 22,000. Maybe if we see furthermore weakness because of the expiry, then we may see the levels of 21,850 on the downside. But broadly, we are of the view that it's a corrective pattern, and after correcting to the expected levels, we can again expect rebound. Based on the Singapore Nifty or maybe GIFT Nifty, the indication that we are going to see higher opening, but the real trend will emerge if it crosses 22,300. Which was the highest point of yesterday's trading session and the all-time highest level. So broadly, we are of the view that if there is any correction, we should look for adding some long positions. But if there is a higher opening close to 22,200, then there we should look for taking some profit on long positions. Bank Nifty was much resilient as compared to Nifty. And for Bank Nifty, now the important level to cross is 47,400. Above that, we can expect short covering, which can lift the index towards 48,000. So there also our view is same. We should be buyer if there is any correction. And 46,900 or 800 is the area where we should look for adding positions with a short term to medium term.
Okay. Shrikant, good morning. What are the ideas you're recommending for the day?
Yeah, I think yesterday we saw specific strength in metal companies, especially Tata Steel as well as Jindal Steel and Power and JSW Steel. There we have a bullish view based on technicals. We like Jindal Steel and Power, which is currently around 770, 772. The stock is forming a high top, higher bottom, as well as it is holding well above its important support lines and all the averages. Based on its technical pattern, it is outperforming to other stocks also. And broadly, it is heading for the levels of at least 800 to 810 in the near term. Buying is advisable with a stop loss close to 760. We also like few private banks, but in that, IndusInd Bank is forming double bottom sort of formation. And based on its formation, the stock can move to the next levels of maybe 1600, 1650. So at this level, around 1520, it's a buy with a stop loss close to 1480 on the downside.
All right, time for a very quick break. We are just about a few minutes from the pre-open trade. A quick look at the implied open before we go into that break. So we know sugar is going to get beaten down. Metals might see some kind of a spark. OMCs may not have a very good day, but overall the implied open shows about 63 points up. We'll be right back after this break.
back with India Market Open right here on NDTV Profit. Now, there's a clutch of stocks which didn't do well yesterday and some stocks which did well yesterday. So we marked real estate as a pocket which had a really strong move in trade yesterday. And OMCs at the other end didn't have a great move in trade yesterday. ABB had a strong move in trade yesterday, but some Coal India didn't. So there were obviously movers and shakers yesterday. Nirav, I want to come to you on, let's say, the oil marketing companies. If you had invested into them earlier, would you right now take money off the table? BP, HP, IOC?
No, I think I prefer to hold on to my positions because I think from a valuation perspective, I think still the OMCs, the oil marketing companies, have a lot to offer. So I would prefer to hold on to my positions in OMCs especially.
So I'm just wondering, Nirav, if in 3 months you made about 50, 60, 70% or 80% in IOC's case and the valuations have moved so much higher, isn't it tempting to book and maybe look at other pockets, or you believe they're still reasonable?
I think the kind of investments which are marked up for the petchem sector, the kind of outlook, the demand outlook which is there, I think it prompts me to believe that I think we should hold on to our positions for some more time.
Okay, fair call. Shrikant, I don't know if maybe you gave a view on this one, but if not, are you booking profits from a trading perspective, or are you staying long?
I think if we go through with the technical patterns of all these companies, then they have like reached to their extreme levels in the short term. Yes, no doubt that we saw spectacular rally in last 3 months, and they have reached to their some extraordinary levels. But in the near term, yes, we may see furthermore correction. It's not like that the trend is over for all these companies. So BPCL looks really weak as compared to other stocks. So there we can see furthermore correction in the near term. But IOC is still much better in terms of its relative outperformance. And in case if there is any reversal, if we see any correction in the crude prices, then IOC should do much better as compared to BPCL. That's the overall view. So my view is that in case if there is any correction, then we should look for adding them with a medium-term view. But with a very short-term view, there is no point in taking any long position.
All right, your first rates are up, and we'll wait for them to settle to see a clear trend over there. But in the first rush, Hindalco is having another spectacular day. Hindalco was the stock of the day yesterday morning, about 24 hours ago, because of the Novelis IPO story. It's opened about 7.5% up, but we'll wait and see how that settles. Clearly, these are the first few flushes of trade. Grasim, also, I just want to see what Grasim is doing very, very initially, because Grasim has been on a tear. And you're going to see, perhaps an up move. Their entry into the paints business comes in today. ITC is the other one that we'll talk about. A story today in the paper saying that they might grab a bite of Pratap Snacks. Not too much on the stock, at least in pre-open. We'll wait for that to settle. But Shrikant, I want to come to you on Grasim. And, what you see happening on the charts. Of course, we'll come to Nirav on the whole paints picture. That's a very exciting and interesting story to talk about. But let's start with what you see on the charts, Shrikant.
Yeah, I think, the overall pattern, if we see of last few months, then the stock was into range-bound activity. No doubt that it was forming new highs, but after hitting the new highs, it was coming back to the previous lows. So that was the overall trend. But maybe after this specific news flow, I am of the view that now it is heading for the levels of 2,500. So in case if there is any correction, we should be buyer with a short-term view. But if there is a medium to long-term view, then I think at even these prices, around 2,200, 2,250, we should look for adding this stock with a long-term view, with a view of 2,500 on the high side.
So Grasim, long-term view 2,500. It's an accumulate as per Shrikant Chauhan, even at a 2,240, 2,250. Nirav, just on the whole paints picture, and we'll fill up bits of that Jeffrey report as well, which talks about impact on Asian paints, etc. Are you bullish on Grasim's entry into the paints sector? Something they announced a couple of years ago, but it seems they're coming in with a bang.
Yes, very true. And of course, based on our study of the entire paint sector, what we understand is that Grasim will be able to make a dent as far as the unorganized players are concerned. Because still in the paint sector, we have a lot of unorganized smaller players, the fragmented space, where there is a very good potential to capture the market space. So Grasim will essentially eat into the share of these unorganized players, and it may have a limited impact as far as Asian Paints is concerned. So I think Asian Paints will have its own share of problems because growth has to be managed. The volume growth has to be managed, the rural economy has to be managed, the product mix has to be managed. So I think the underperformance of Asian Paints would have nothing really much to do with Grasim's entry. And I think on its own side, Grasim will continue to do well. We expect the stock to do very well because of their entry into the advanced materials business also. They have also doubled their capacity in epoxy resins and formulations, and they are going in a big way in building materials and B2B e-commerce activities.
Well, you know, on that note, Nirav believes there is no impact, maybe on limited impact on Asian Paints. I believe Jeffries is amongst those who believe in the other end. And Harsh Seta, my colleague, is here to tell us what Jeffries thinks of the paint space and Asian Paints in particular. Also, another brokerage note as well. So a couple of key brokerage notes to watch out for this morning. Harsh, let's start off with the with Jeffries' view.
Yes, Niraj. So, you know, everyone knows some of the mechanics that are playing out, but let me just reiterate nonetheless. One plant to be, to kickstart operations this week, but outside of that, two more to come on stream for Grasim by the end of this financial year, and three more in the next 12 months. That means there's going to be plenty of supplies, what Jeffries is really referring to in terms of the paint space. Also, with regard to the back-end work, they believe Grasim has already, and commentary also suggests that Grasim has already significantly ramped up with regard to IT infra already in place. Logistics also is something that they're ramping down, that they are really pushing, and they are expected to start to go live as well in a big way. Leases for depots, onboarding of dealers, even ads, all of that is getting finalized in the pipeline. Now, with regard to Asian Paints itself, they believe, Jeffries believes that revenue growth is already slowing down, so that's a negative, and that trend is expected to continue going forward. They also believe that Asian Paints may look to pass on some of the benefit to consumers to ensure that volume growth remains intact, or even is made a priority, and therefore pricing pressure will come into play. Not just Grasim, but even other players, including Asian Paints, are really pushing with regard to capacity. They are expanding capacity, and therefore pricing will come under pressure according to Jeffries. Smaller players more impacted, that's a possibility, but they believe that industry profitability will be impacted just on the sheer magnitude of the expansion that's being carried out. They are perplexed with regard to valuations, which have remained elevated despite the underperformance, 55 times 1 year forward, and their estimates are 7 to 13% below consensus when it comes to earnings. So they've valued it at 2,500. They're seeing roughly a 17% downside to this one. Quickly moving on to the next one, City on Maruti. Well, they've maintained their target price of 14,200 on Maruti. They have a buy rating on it, but they've opened a 90-day positive catalyst watch on this one. Why? They're expecting pickup in monthly volumes, and that on a sustained demand as well as restocking. That should aid monthly volumes. Second, they're expecting lower discounts and higher operating leverage to play out in Q4, which should drive earnings growth for Maruti. They believe that this could see more news flow, or rather Maruti could see more news flow on the back of refreshes to both the Swift and the Dzire, and that should aid Maruti positively going into Q4. Also, with regard to valuations, 26 times FY25 EV to EBIT is how they value it. 14,200 is the price that City has given to Maruti.
Okay. Harsh, thanks for that. Seems that on the pre-open session, this one might actually have not a bad start, so keep an eye out. Maybe a flattish move. Actually, the pre-open session itself, there was about a 60-70 point uptick believed. Let's see what the pre-open session is doing. We're just about getting settled there. About a 26 odd point start. So that's how we are likely to start off. Must say, yesterday's big winner, ABB, is likely starting off well today too. That's another 4.5% added to the 10% up move yesterday. So strong brokerage calls coming in, and there's a bit of a reaction happening there. But quick one out here. So on Maruti and on ABB, Shrikant Chauhan, any thoughts? Citi is constructive on Maruti, and UBS and Nomura are constructive on ABB.
Yeah, Niraj. I think ABB looks really strong. The reason is because the way we saw price expansion and volume expansion, and also whenever the stock has corrected, it is bounced back to the previous highs. So while looking at its entire pattern, I think the stock is heading for at least 5,500 or maybe 5,700 based on technicals. And yesterday's overall activity is indicating us that if there is any correction, then we should look for adding positions. For Maruti, I think it will remain into uptrend and gradual uptrend. So I'm not expecting stock to blast, but it is going to remain into uptrend gradually. Maybe 11,800, 850 is the next level to watch out for. But again, the strategy should be to buy Tata Motors or maybe Mahindra & Mahindra as compared to Maruti.
Well, strong moves there. By the way, the other ones which are reacting to news flow, Eureka Forbes, the block deal done, presumably large trade rather, 5.5% up for Eureka Forbes. Much talk about how there is selling happening and how the stocks will languish post that because the smart money is getting out. Quite the reverse is happening, to be honest. And Eureka Forbes is not necessarily the example, but a clutch of names. I mean, Texmaco saw a large sale in sometime in March or April 2023. The stock has delivered 300% return since then. So, I mean, yes, it is disconcerting to see large sales happening, and maybe at some point of time the cookie will crumble. But for now, it looks okay. The other one, NBCC, Tamanna highlighted it, up about 4% at the end of the pre-open session. And there's also strength in Home First, which is up about 3.5% in the session, and Brigade, which is up about 4% as well. Nirav, the space, real estate is looking very strong. I'm tempted to ask you, which is that one name that you guys are recommending to your clients to invest into afresh?
I think afresh, I wouldn't say afresh, but we've been constantly recommending Godrej Properties to our clients, and we've been reiterating our calls over there. Apart from this, we've also been recommending Century Textiles, Raymond, and DLF to our clients.
I just want to look at what Paytm is doing this morning, because that stock has spent its fourth trading day really doing very well. It's off that upper circuit where it was in pre-open, but it's gone up to $400. And think about it, Friday's close was 341. It's a 50-60 rupee increase in just about 4 trading session. We're also now getting news in that there's been a block deal. 3.69 million shares have been traded in Paytm. Now, my question is that all the concerns have been around, nothing has changed really fundamentally, but yet anyone who wanted to take a short-term play on Paytm at the start of the week and had the courage to do it would be very happy right now. Shrikant, any views on what is happening with this counter?
I think, very clearly the stock is following to the pattern of lower top, lower bottom. That means the trend is very clearly down. But because of the deep cuts, whenever the stock is falling to the extreme levels, it bounces back to retrace the previous fall. This time also the pattern is more or less similar, and maybe we may see the levels of 420, 430 on the higher side. But broadly, we are of the view that it is better to stay away from taking any position at current levels because the stock is still under the event. So whenever the stock is under the event, it gives some abnormal sort of activity during the day. So it is better to stay away. There are number of stocks to trade for, but in case if we see the stock is crossing the level of 530, then we can say that the stock is stabilizing. So 530 is the previous swing highest level. till the stock is not crossing that, I think the stock is going to consolidate, or maybe it is going to remain into that downtrend.
Eclerx has a sharp downtick, 9.5% on open, so that's interesting. But Eureka Forbes is the other one, up 5% today, is a stock in news. Nirav, do you fundamentally track Eureka Forbes?
No, not Eureka Forbes, but we look at the entire water treatment space, and I think there's been a very good movement as far as all the players are concerned. Most of these companies have been doing quite well, water treatment chemicals, etc. So whether it is Thermex or whether it is Vatek Wabag or whether it is Eureka Forbes, I think all of them have done quite well in trading.
Metals are doing well this morning. Shrikant's call pre-open as well. At least pre-open and Hindustan Copper, NMDC sale, all looking set to have a pretty good start. Shrikant, any last calls that you see before we hit opening in about a minute and a half?
Yeah, I think in that space, JSW Steel also looks good. The reason is because, again, the stock is forming double bottom. The overall space is going to do well. From here, the stock can again bounce back to the levels of 900, because whenever there is a recovery in the stock, we see a recovery at least up to 7 to 8% from the previous low. So here also, I'm expecting stock to move upward towards 880 or 890. I think JSW Steel is a buy at current levels with a stop loss close to 815.
Sorry, Shrikant, reconfirming, is that your top stock call for the morning, JSW Steel?
Yeah, I think all the metal stocks, they should do well. In that, I like personally Jindal Steel and Power, on which I have given call. But apart from that, I think JSW Steel should also be on the watch list.
Oh, okay. So your favorite is, of course, JSPL, which is Jindal Steel and Power. Viewers just distinguish that. All metal stocks could do well according to Shrikant. JSPL is his favorite. Now, the reasons could be many, but if you just look at what's happened in the last few days on China front as well, phenol prices have inched up, metal prices have come into focus, and which is why I think this move around all of these stocks have started. So just keep that in mind as well. As we said, a large equity trade on Eureka Forbes has happened. That stock is likely to start off about 5.5% higher, so it remains a top draw. But let's start off with the large caps. This Thursday morning, we'll have a flattish start, very likely. Flat as flat can be, really. It's just bobbing between the red and the green. No big shakes. So the GIF implied open numbers didn't turn out to be true, very quickly into the red actually. The banks also just about status quo, no big changes there. Wonder if the broader markets have started off okay. Again, flattish moves. Doubt that the small cap index is doing anything different. It was a bit more resilient in the mid caps yesterday. Bring up the BSE small cap if we can before we just pull up the heat map, because the small caps did reasonably okay yesterday relative to the mid caps, about 0.4% higher, so not a bad one. Let's get the heat map up on the screen and show you what's doing well and what is not. So Grasim is at top of the pile, up about 2%. Wonder if Asian Paints is somewhere in the losers list. Yes, indeed it is. Asian Paints is the top loser. This is a great contrast that we're seeing this morning, viewers. About a 5% difference on a pair trade if you did one. But Grasim up 2.5%, Asian Paints down about 2%. So that's the story of the morning. The paint companies have shown opposing forces at play. What else? There is weakness in Power Grid, weakness in HDFC Bank. There is weakness in BPCL yet again. So it was down yesterday, amongst the top losers on the Nifty yesterday, and down yet again today, BPCL. Aside of that, maybe a Dr. Reddy's, maybe a Titan, on which there were some sell calls yesterday, but maybe a little bit more green than red. You could actually argue it's even Stevens. Now, Asian Paints is actually deepening those losses as well. What is doing well? Axis Bank, and yesterday or day before, I think, yesterday SBI held fort. Today, Axis Bank is kind of doing okay. There's strength in Hindalco. We spoke about the strength in metals, very likely. Coal India from the metal index also up 0.8%. And IT, by and large, seems to be holding out marginally, but nothing great out there. So, metals doing okay. Grasim doing okay, Asian Paints not so much, and BPCL continuing to sulk. That seems to be the summation of what's happening in the index at least, but the real action and the news flow at the broader end, Tamanna.
Absolutely. I would just add maybe a Maruti, not too bad this morning because of the city note perhaps. But let's start with seeing what's happening to sugar stocks. That's a space that we focused on all morning. On the face of it, of course, news that sugar producers will have to dish out more for their core ingredient, which is sugarcane, looks like it's negative, but not too much of a hit, if I do say so. Balrampur and Chini about percent down. Yes, they're all down in the red, but not very, very negative, I would say. But we could look at a few more of those sugar stocks and see what's happening there as well. Yeah, so between 1%, 0.5%, and maybe up to 2% in Mavana's case, down. So a little bit of a negative sentiment, but not a complete slam dunk. OMCs, we already addressed what's on the Nifty, but let's just look at what BPCL, IOC are doing. HPCL is okay. IOC and BPCL, the big losers this morning. So back-to-back notes which talk about weaknesses in OMC. It was Spark Aventus yesterday, it's CLSA this morning. So that outlook is looking negative on OMCs as well. Titagarh is the other one I wanted to talk about. A bit of news there this morning. They are investing 100 crores in the JV SP with Shivalix Metal. So let's talk about 1% up. Let's see what ABB is doing this morning. So it was the big closer, the stock of the day yesterday on trade, closed about nearly 10% up, 9-10% up. Nomura Note sees positives really sustaining from its Q3 numbers, and that stock up 3% this morning as well, already on the back of a big bump up yesterday. So ABB is in the pink of health, so to speak. South India Bank is the other one I want to talk about. They are looking at a rights issue. And it's a 1,151 crore issue. The record date is Feb 27th, and the ratio is 1:4, 4.5% up. Not bad at all. And Paytm now on a downslide after showing a technical jump up for the last many sessions, is back in negative zone today. So quite a few stories out there this morning, but so much more happening, isn't it, Niraj?
Yes, Tamanna. So Campus Activewear is up 4%. SBI Mutual Fund yesterday bought out that stake that was sold. That stock is up about 4% and is amongst the top gainers in addition to NBCC and HEG. So watch out for that one. By the way, HEG and graphite. So the graphite electrode makers seem to be doing okay this morning. So that's to be kept in mind. Essentially, anything related to China and metals is doing very well, and that has to be given credence to. It is showing some serious strength in trade. Wonder if Pratap Snacks is doing well on the note that has come in. Oh, whoa, that's 10% higher on a story in one of the dailies that ITC may take out PE firms 47% stake in Pratap Snacks. That stock is up and active, and how I'm sure the volumes on Pratap Snacks as well have really inched up. So watch out for that. There's some weakness in Whirlpool yet again. So that's the other one. And some weakness in Devyani International as well. So those are the other two that people should be watching out for in today's session. But yeah, that's the sum and substance of how we've opened up. Just a quick word into the small caps and see if we've missed out on any big moving small cap. By the way, for whatever reason that ABB is in the small cap space, that one is doing well. But Grar and Whale is up about 15-16%, maybe on tepid volumes. No, actually not on tepid volumes. So that is doing well. Associated Alcohol is up. Marathon Next Gen is up about 8%. And Nelco and MTAR Tech. So I think the space companies, MTAR Tech is doing well. By the way, sorry, the last name before MTAR, after MTAR Tech is Walchand Nagar. And see if Walchand Nagar Industries also is up in the green because of that 100% FDI, about 2.5% higher. Okay, quick opening thoughts. Actually, before I go to Nirav on the space companies, Shrikant, opening thoughts, any stock that catches your eye, or if a trade on an index if possible?
Yeah, I think after this specific opening, we are seeing some strength in IT companies, especially in those companies which are like really doing well, like HCL Technologies. I think there we are expecting further more activity. The stock has corrected back to the levels of 1600 when there was correction in the market. But now again, it is back to 1650, 1660. So I think, Niraj, from here, the stock can easily move to the levels of maybe 1730 or 1750. So HCL Tech looks good to buy. And as you mentioned, I think all these PSUs, especially oil PSUs, are under pressure. So we can expect some further more weakness in this particular sector.
Okay. Fundamentally, Nirav, not a very large space, but the 100% FDI in space Have you guys analyzed any of the businesses in this pocket, and do you like anything there?
I think we've looked at Walchand Nagar, but I think it's very early to really identify any companies which could benefit in a very, very significant way. So we'll wait for some time. As things pan out, we'll be able to come out with something concrete in this space.
Okay, but the whole pocket seems to be doing rather well for itself. So best kept in mind. Again, on the small cap space, in amongst the stocks that either have made the big move on the upside or the downside, or on the downside, Pratap Snacks is up about 10% as we highlighted. Marathon Next Gen from the real estate space is doing very well. So that's to be kept in mind. And Campus Activewear, a large block deal yesterday bought into by an AMC. The numbers haven't done that great for a Campus Activewear or a Relaxo or a Bata or some of the others. Niraj, are valuations in your favor fundamentally, or would you stay away?
So I think Campus has been an underperformer since the time it got listed, and the stock has been under tremendous pressure because the results have been very, very disappointing. And I think at this point in time, at this valuation, I think it could be a compelling entry point on the hopes that the performance will improve in the ensuing quarters.
Let's just take a look at what's happening with NBCC. Interesting story there as well, because they have a 1,000 crore deal in the sense. Basically, the beleaguered Amrapali projects will have to be taken over and rebuilt. The stock is up today as well. Nirav, let me come to you first on what you make of an NBCC, and do you think this is now a long-term play?
Yes, definitely. This looks like a long-term play, and I think they will be able to capitalize on this opportunity with what they've got at this point in time. So I think one can have a fresh look at it.
Shrikant, you think NBCC were taking another look at as well?
Yeah, sure. I think here also, if we see the pattern, then there was deep cut from the levels of 175 to 120. So I think now the stock will take time to perform. But yes, with a very short-term view, we can see some range-bound sort of activity. I'm not expecting stock to cross the level of 150 so easily. On the downside, it has support somewhere close to 125. So I think it's a range-bound stock, and maybe after the news flow, it is better to take some profit on the long positions.
3% higher for this one. Okay, so that's with regards to NBCC today. KPI Green is up 5%, but Inox Green is down 3%. So that's one set of stocks to monitor as well. Interestingly, what's happening to some of these green pockets is very interesting. And I think Shrikant made this observation about how some of the IT names are doing well. It's percolating down to the smaller end too. Birlasoft is up about 2.5%. Nucleus Software I saw some time back was up about 2.5%. So some of these smaller names seem to be doing okay here. Just wondering, Niraj, while people talk about the big four, etc., and what's happening, some of the growth numbers in the mid-cap and small-cap IT names were very strong. Have you guys looked at this pocket? Do you like anything from here, and why so?
Yeah, actually, the mid-cap companies have performed quite well. So I think we'd like to look at the L&T twins, and of course, we'd like to also KPIT technologies, etc. So some of these stocks look very, very, very exciting from a medium to long-term perspective.
Okay, well, watch out. Birlasoft and Nucleus are just amongst the others which have done well. And a lot of stocks this morning, like we said, IT is doing well. Space Tech, I mentioned Walchand Nagar and MTAR, but there is also Nelco, which is up 6.5. There is also a couple of others like Mishra Dhatu Nigam, which are up about a couple of percentage points as well. So keep an eye out for those stocks. Nirav, before we let you go, one fundamental idea from your end, which the house would have looked at in the last few days.
I think if ABB has done well, I think Siemens should also follow. So I think I'll go with Siemens.
Fundamental differences between the models of both the companies, Nirav?
Yeah, there are a lot of differences, but essentially both of them have got technology leadership, and technology leadership essentially will give them pricing power in the time to come, and that will lead to superior quality margins.
Before we wrap, last call from Shrikant on two, I think, tale of two paint companies, or one which is going to become a paint company as well, Grasim and Asian Paints. We saw that sort of divergent move, right at start. So Grasim now a little pared down, but about 1.5–2% up. Asian Paints 1.5% up. Shrikant, on the charts, what looks stronger?
Yeah, I think there is no doubt that Grasim is really doing well. And it's not that it is like in the short term performing. There was like uptrend since last so many weeks and so many months. So Grasim, yes, we can expect furthermore upside. But I think now the downside for Asian Paint is also about to over, because now the news is out and the stock has spent a lot of time close to this 2,900 levels. So unless and until the crude is moving back to the levels of 90, I don't think that Asian Paint is going to underperform from here. Yeah, it will take time, but I think the stock is now very close to its important support levels. And if there are like any investments, I think it is better to sit on them or maybe to hold them with a long-term view.
Yeah, absolutely. Thank you so much, Nirav and Shrikant, for joining us on the show today. Just a quick look at one stock, and you're seeing that news flashing on your screen before we go into that break. SpiceJet has raised an additional fund of 316 crores. Their total investments now stand at 1,060 crores. SpiceJet, anyway, an interesting story. They want to give support to Go. Of course, Ajay Singh wants to run Go, or is bidding for Go in his personal capacity. But meanwhile, that airline and that company also shoring up its own resources. Very quick break, but on the other side, we have a whole set of interesting conversations. We'll be right back with PTC's Sachin Agarwal.
Well, we are seeing a lot of changes in multiple sectors in India. Company after company has come in and spoken about how the Indian aviation supply ecosystem is now truly becoming a global supplier. And we've seen multiple instances of that. One of the recent ones was Aeroloy Technologies, which is a subsidiary, 100% subsidiary, if I'm not wrong, of PTC Industries, signing a long-term purchase agreement with Dassault Aviation for supply of titanium cast parts for the Rafale multi-role fighter aircraft. PTC is a manufacturer of precision metal components, and in this slide, we thought it's best to get in Sachin Agarwal, who's the chairman and managing director of PTC Industries, and must be a proud man, joining us on the show today and telling us what this entails. Sachin, good having you. Thanks for taking the time out. Congratulations on this. It happened, I guess, about a month ago, but we got on a chance to talk now. Just tell us, what does something like this entail?
Good morning, Niraj. Thanks a lot for inviting me on the show. This basically is an agreement that we signed with Dassault Aviation for their entire fighter jet aircrafts and even their business jets, Falcon. So all the titanium cast parts that go on these aircrafts would be manufactured by us in Aeroloy. As you rightly said, it is our wholly owned subsidiary. Over a period of next few years, these will be developed and will be supplied not just for the requirements in India, but for global requirements wherever they sell these planes. So it's a big deal. This is the first time they would be moving out of France or Europe for manufacturing of such critical parts that go on such type of very stringent quality requirements and technical requirements. Is something like this multiple quarters or multiple years in the making, Sachin? And now that it's been done, what does this open up PTC Industries for? Within more supply to Dassault, as the case may be, or to other companies? Because I'm sure global companies will take notice of the fact that such a large company has chosen an Indian supplier. And tell us, what has life been since then? Well, many such things have been in the background working for many years. It's not, yes, this came to fruition just about a month back, but the kind of investments that we are making and the areas that we are making in, and the kind of technologies we are bringing and have already brought is of interest to all aerospace and defense companies worldwide. All the primes, all the top tier and middle tier companies are interested because the biggest issue is supply chain. The supply chain is highly reliant on certain countries and very highly reliant on even certain companies, if I can say so. And this is a very big investment and a creation of capability, which of the scales and the magnitude and the end-to-end coverage of the entire supply chain, right from material all the way to components and systems, has not been seen globally. And so that's what excites them, and that's what brings them on to us, and to secure the supply chain for the future. So Sachin, we unfortunately today have paucity of time, but I would love to therefore try and get a sense of what would something like this mean for PTC for the future. You've given us a sense of how important supply chain, quality supply chain locking down means for some of these companies. You are right in the thick of things now. From where you are right now at PTC Industries, let's say end FY24, how do you envisage PTC to be like 5 years out? Let's say towards the end of the decade, or if that's too far, maybe 3 years out. Your vision for PTC? So the vision for PTC is very simple. It's driven by a single word, which we have adopted as our dharma, is parity. So we want to put a capability in India, which puts India, the country, at par with the rest of the world in the domains, in the sphere that we are in. That is metal and metal components. Now, that means that to get into those technologies where there's a gap in the country, we only fill those gaps in the country. Something which some other companies are not doing, or where there's a gap in technology, capability, infrastructure, skill, knowledge, know-how, whatever it is, we'll fill that gap. And driving by that mission, we are able to identify things like titanium, superalloys,
manufacturing capability within the country, which was not there earlier or hasn't been there for the last 70, 75 years. And in that sense, what we see over the future is a massive increase, a multifold increase in our capability and revenues and margins going forward. So the next 5 years are going to be a very interesting one, because lots of global as well as Indian defense manufacturing requirements driven by Atmanirbhar Bharat is coming to us. And we are really filling these gaps and filling these requirements for supply chain integration for foreign OEMs as well.
Got it. Sachin, a few people who might understand this space better would have already been investors, but for the larger investors who are trying to understand your company, I'm trying to be the bridge right now with this question of mine. I heard you say that multifold increase in revenues and margins are possible over the next 5 years. Your revenue numbers, for example, Q3 weren't the most impressive, but the margin expansion was visible and telling from 21 to 27%. I'm trying to understand, lay out the numbers for us from 27 odd percent or wherever you are right now. What is the new normal like on an average over the next 5 years, if you will, or what are the numbers that you can reach? And when you speak about multifold increase in revenues, is there a vision statement that you laid out for reaching a particular revenue number at the end of the next 2, 3, 5 years, as the case may be?
So the revenues will be driven. So in a sense, the investments we have made and we are making now are of very large capacities. If you look at the capacities that we're installing for aerospace materials like titanium alloy manufacturing and superalloy manufacturing and titanium casting, superalloy casting, single crystal castings, these are technologies which didn't exist in the country. Not just exist in the country, nobody would give these technologies to India. We have been able to manage to bring these capabilities within the country. That's a big thing. Now, just talking numbers, margins are going to improve. When you're saying 27%, I think we are going to be reaching somewhere in the region of 30 to 35% EBITDA margins pretty soon. And that's where they will stay. The most important part of this business is sustainability, not just sustainability of our ecosystem, but sustainability of margins as well. The sustainability of margins is very dependent on the type of business that you are in and the competitive scenario, not just in India, but globally. If you're a machine shop, there will be hundreds of machine shops that will come up over the next 5 years, and protecting the margins is going to be difficult. But the technologies that have not been there available for 70, 75 years cannot be assumed to be available again suddenly for a plethora of people for various reasons. Access of technology is one, absorption of technology is another, and the financial investments are another aspects where we have been able to get these technologies and equipment and infrastructure at a very, very low cost, almost 1/5, 1/10 of the investment that it would have required. So all this put together puts us in a very, very sweet spot where we, as I said, a multifold increase in revenues and sustainability of margins, not just being able to achieve margins for 1 year, 2 years, 3 years, but to be able to keep those margins for a decade or two.
20-second answer, because we're out of time completely, Sachin, but you did about 200, 220 crores, circa 220 crores FY23. Multifold could mean 800, multifold could mean 1600, multifold could mean 3000 crores as well. Any targets?
All those what you said. I'm just going to keep that at different points of time, of course.
Yeah, but so next 5 years, you believe you could be 5x what you were in FY23? Or more
Reasonably
than that?
possible.
Reasonably
possible.
Fair call.
Yeah.
Okay, Sachin, we wish you all the best with this and more. Thank you for taking the time out and speaking to us.
Thank you, Niraj.
All right,
Thank you.
Well, that's PTC Industries, confidence personified, contract with Dassault, and margins likely to improve going ahead. Time for a short break. We'll be right back with the management of Endurance Technologies on a recent announcement that the company's come out with.
All right, it's the fag end of the earnings season, but we're focusing today on the auto ancillary space and the Q3 numbers of Endurance Technology. This player is in aluminum die casting, suspension, transmission and braking systems as well as aftermarket. Now, in its Q3, revenues have been good, up 22%, EBITDA up 30%, net profits also looking solid, up 40% year on year, but margins have been quite flat. What is the outlook for this space? To speak more on this, I'm joined now by Ramesh Gehani. He's Executive Director and COO at Endurance Technologies. Mr. Gehani, thank you for speaking with us here at NDTV Profit. Let's begin by talking about the margins and where that pressure is coming in from. Have you also seen a bit of Maxwell's performance weighing in on the numbers?
Yeah, good morning. Let's keep Maxwell aside for the time being, because that's on an uphill trajectory as far as orders and businesses are concerned. And but otherwise, if I look into the console and standalone numbers, we've done fairly well alongside the industry. If you know that the industry has grown just about 5.8% and we have grown 15%. So the numbers are floating in, and I think we're pretty happy the way things are going. Even in January, if I look into the CRM numbers, they're fairly encouraging. So if this trend continues, I think we can all see a very promising year ahead.
Fantastic, absolutely. Two-wheelers are picking up as well. But just coming back to the margin number that you've seen, we're up about 0.7% bips. Can you just give us more sense and more, a clearer idea of that?
See, there are two ways of looking at this. On a quarter-on-quarter basis, it's an PSI incentive which plays a role. Because on Q3, we don't book any PSI incentives. That's something we do on Q1 and Q2. So on a comparative basis, you'll find Q3 a bit subdued because it does not hold any PSI incentive. But on an overall basis, we have grown on margins, not only standalone, but even on a consolidated basis. At a PAT level of 7%, I think these numbers will surely improve further as the industry performance increases.
Yeah. One big change this quarter was also an incentive from the Maharashtra government. And that's something that, all of you have talked about in your con call as well. I want to understand how much of an impact it makes, because that incentive, if I'm not mistaken, is about 59 crores odd and is not continuing anymore. Is that right?
No, it's not that way. See, the total incentive that is booked under the PSI scheme, which is package scheme of incentives for Endurance, this is scheme 2013. We have got an eligibility of 466 crores, out of which 327 crores has been booked. But what has been received is 240 odd crores. So what you will see in the coming years is a build up to 466. But once the 466 is totally booked up, then after that, there's no incentive on the current scheme. But we are also entitled, or we are, applying. We will be applying for the 2019 scheme also. So this package scheme of incentive, which is by the government of Maharashtra, is very attractive and very promising. So we'll be continuing with these incentive plans.
Okay, so you're saying that the incentive scheme is likely to continue. Of course, you have to reapply for it, etc. But that is a policy move that the government has talked about, and you're saying you're expecting that to flow in as well. Am I understanding that correctly?
Yes. So the 2013 scheme ends as soon as we receive the total amount of 466 crores, and then the 2019 scheme, for which the eligibility will start for 350 crores and above on capex. So we will be able to qualify that. On that number also.
Okay, let's talk a bit about the regional or geographical breakdown. From what I'm seeing in your numbers, India has been the power driver, and Europe business has slowed down a bit. Do you expect that to continue?
No, you've got to look at it from this point of view that Europe is now doing better. The numbers are floating in. There also the increase is somewhere around 13%, and the other situations, the working conditions are improving on a comparative basis. When we talk about a year or year and a half back, even the electricity prices which were rocketing high have come down quite substantial, although they're still higher than the pre-COVID levels. So these improvement in conditions, economic conditions, or even the working operating conditions are improving, and I see even Europe improving on not only the PAT numbers and on the revenues, but overall basis, you can have a good year for Europe also.
Okay, but relatively, where do you see the biggest growth coming from? Europe will improve, of course, on its base. But if I were to ask you for an outlook for the close of this financial year and the next, where do you see the engine of growth coming from?
See, there are many growth factors which we have for ourselves. One is premiumization. The most important part is premiumization. We took a very early start on the premiumization of on our product lines, right? For example, high-end suspensions and high-end braking systems, where we've got orders booked even for high-end CC bikes and high applications for the suspension. Then ABS is something which we entered early 2 years back, on which we have already reached our capacity volumes of 400,000. So these are the growth drivers which will come not only from premiumization but also from regulatory norms and other things like better configurations on the vehicles, and EV taking a lot of space or finding traction into the system. That will also bring in new orders.
Okay, let's talk a bit about your new orders. From what I saw on your con calls, about 1,700 crore worth of inquiries from OEMs. Can you give us a bit more detail on that? How many of these you expect to come through?
Well, see, our normal strike rate has been on RFQs close to 20 to 25%. It depends on which product line is coming up on our RFQs, although we bid for all the numbers which are relevant to our business model. But the total business wins for this year has been close to 1,000 crores or in excess to about 1,000 crores, out of which the peak capacity of this will be reaching close to end of next year.
Okay. Now let's talk about Maxwell. A tough quarter and EBITDA loss over there. And as you've mentioned, one of the main reasons is the postponement of EV launches. How are you expecting that, and why are you expecting that situation to improve?
See, there'll be a bit of peaks and valleys on the EV sector as we are experiencing, FAME 2 subsidies and so on. And I think the whole system is getting recalibrated as far as the market position is concerned. So we have got some handsome orders. We've already, in fact, Maxwell directly has booked 380 crores of orders on EV, and which is likely to be matured in full extent by 2027. And they are on the up move. The BMS is also taking a good shape, and as the volume move forward, as we find extra numbers coming in from the OEMs, you can definitely see better performances from Maxwell. I personally feel, and I'm pretty strong about it, that we should be EBITDA positive very shortly.
What would you define as very shortly, Mr. Gehani? Would you like to put a time frame on that?
You can say by Q1 of next year.
Okay, so that's not far away at all. So Q1 next year, you're saying you'll be EBITDA positive on Maxwell. That's an important take. Just last question, your outlook for the two-wheeler space as well. On an upside, but in fits and starts in terms of demand, etc., especially in the EV space, how do you look at two-wheeler demand panning out?
See, I would view it a bit differently. The peak that the auto industry, the two-wheeler industry has seen was 24.42 million. This year also they're expecting to close, if I annualize basis, I can see it's likely to close around 21 million. So if I just make a direct comparison, I think there's a headroom of 3 million vehicles to the peak that we had already achieved. But as we find EVs coming in place, there can be some extra numbers pouring in, which will carry on and find its balance in the coming years.
Okay. Thank you so much for speaking with us. That's the management of Endurance Tech talking about the quarter that went by and the optimism when it comes to a pickup in the EV space as well. That's all the time we have on India Market Open. It's a wrap on this show, but stay tuned. Talking Point up next.
Thanks for tuning into today's Talking Points, a special one because we've got the City think tank to try and to analyze what Q3 and the 9-month results have thrown up for India Inc. and what could calendar year 24 or FY25 hold in store from an earnings and a valuation perspective for the market at large and for specific pockets. Joining me on the show today are Surendra Goyal, he's head of City Research India, Kunal Shah, Saurabh Handa and Atul Tiwari tracking banks, oil and gas, telecom, as well as industrials, electric utilities and property respectively. Gentlemen, all of you, thank you so much for taking the time out. I really appreciate you being with us in our studios. Surendra, if I can start off with you, end of Q3, are you guys more upbeat about the earnings reportage based on what was reported and the con call analysis that you would done for Q4, or are you a bit circumspect?
Yeah. So thanks for having us on the show. So to begin with, say more than the earnings, we look at the upgrade to downgrade ratio, which again was positive both for FY24 and FY25 within our coverage. Okay, so that kind of tells you that things are progressing in the right direction. Okay, and if you look at the consensus Nifty earnings forecast, it has pretty much remained unchanged through the year. If you go back historically, we have started off high and then there have been downgrades. For most years, if you take the last decade, barring 1 or 2 years, that's been the usual trend. So in that context also, the earnings are holding up pretty well and it's a fairly good level of earnings also, right? So as we go forward from here, there is generally an expectation that we still have around a 14% earnings CAGR for Nifty over the next couple of years. So to that extent, I would say that, yeah, sentiment has been pretty upbeat, but this quarter's earnings kind of supported that. Okay, and even the upgrade downgrade ratio, which I spoke about, everything kind of pointing to things trending in the right direction.
Not bad. Good to hear. Where is it that there has been the largest upgrades to your mind, personally? Let's talk about the good news first.
Yeah.
And where is it that some of that might be priced in already?
Yeah. So if you look at sectors like autos, okay, that is where a significant upgrade came in. And again, a lot of it is driven by margins. Okay, so the mix and then in turn margins. So of that was one. And again, we have Saurabh here who can talk about energy. Those numbers have come in fairly strong. Industrials is the other one where again, certain stocks, etc. have done well.